closely watched industry.
Morning, guys. Welcome back. There's the futures, but check out Amazon.
But we were above 3, and then earlier today we were down.
Since 2014.
Hey, Snickers.
That number came in at 9.96.
What's up, guys? Welcome back to your Road to 2 Comic Club. Happy Friday, and I'm super stoked on Amazon right now because we still have one call, and hopefully they do well. Also, Intel and Microsoft had good earnings. I didn't even notice that because I was so focused on Amazon. So I'm going to do a lot of editing right now, and then I'm going to come back in the afternoon, and we'll see how we're doing. Hey, guys. Welcome back. So the last clip I filmed was Friday morning, but I did not film at all the rest of that day. It is now Sunday, so lots of stuff happening. I did, in non-channel news, I did see Infinity War. Really good movie. I'm super stoked for what's going to come next in the Marvel lineup. I'm not going to spoil it for anybody, but it was good. I would recommend seeing it, and of course, stay for the credits and all that. They are long. The credits are freaking long, but definitely wait until after. Okay, so, of course, Amazon was the big thing that happened today. They did come down, but they did close up, so I'm really stoked about that. I'll post the screenshots of how the market did. You can see Amazon did very well for today. I'm really happy about that. There's a lot to talk about, though. Let's just start by talking about the balance. We didn't make a whole lot today. And it's weird because I checked my account like Saturday or Sunday, and all the prices were moving and showing different numbers. It said that Amazon was only up 0.8%, our Amazon call, but I looked at the price, just based on the price of that call, it went up 12.5% since Thursday. So yeah, it's just kind of weird. I don't know if it has to do with just like the after hours trading or what. I really don't know, but I don't like that. Because the one thing I do miss about Scottrade is you knew what the numbers were when the market closed, and even if you went back Saturday or Sunday, you knew like what it was, and it's not like always changing like this. So I'm still adjusting to it. It's just taking me some time. I don't know if I ever will adjust to it. I probably will, but yeah, it's just kind of weird. But anyways, Constellation Brands did really well for us. Nvidia did really well for us. Sprint went up, and I'm pissed about Sprint because they finally made a deal with T-Mobile. That's like huge news. They've been talking on and off for years now. They finally made a deal. T-Mobile is buying them out for $26 billion or $26.5 billion, but it's an all-stock deal. And I finally read in an article that it values them at like $6.60 a share. We have 25 calls with Sprint, but the strike price is $10, and so once again, we missed out on potentially a huge jackpot. Yeah, so I fell asleep at the wheel. I was holding on to Sprint. Didn't think, once they stopped talking to T-Mobile, I figured I'd be fine to hold on to it for a while. Was not expecting them to come to a deal. This came out of left field. So that's kind of why, had they been talking about a deal and I knew about it, I would have sold my Sprint calls because the strike is $10. I would have sold it. I would have bought one lower. But this came out of nowhere. I don't think anyone saw this coming. It's just crazy. So what are you going to do? Let's just move on before I get too upset. So T-Mobile, yeah, we got that. We took care of that. Okay, so we're going to talk about now the overall general stock market. So as you know, obviously May, and by the time you see this, hopefully it will be still May, but there's a saying in the stock market, sell in May, go away, and I don't really like that. But I guess historically speaking, May hasn't been the best month for the Dow or whatever. But like their article was saying that, I read an article saying that especially this year during midterm elections are usually bad, especially for NASDAQ. NASDAQ historically on average does okay in May. Like May is the 5th best month for them. But during midterm elections, it's not really good for them. And so I think this time I really do need to listen to kind of what I'm reading and not hold so much because I've been taking really big hits. I might sell. I'm gonna try to sell as much as I can and buy puts for May. That's my strategy. I just need to execute it this time. and hopefully we can come out ahead. That would be like amazing. If we can make money in May, I will be super, super stoked. But anyways, there's a lot of articles. I'm going to post links in the description for all of these. There's a lot of them, but definitely click on some and read them, because there's more articles saying that we're in for some bad times ahead than there are articles saying we're in for good times ahead. I could only find like one or two that said that our market's doing okay, like it should be fine, but a lot of them are just like, you know, watch out for this, watch out for that, you know, this could kill the market, blah, blah, blah. It's just so, I think on average, the general consensus is stocks are going to be still rocky. They're going to be going down probably in the near future. And so I'm going to just go with the crowd and try not to be caught holding on to stuff as the prices are dropping too much. So, sorry my voice is kind of scratchy, but we'll talk about a couple of these articles. This one's called, it's the change in the bond yields, not the level, that should worry stock market investors. So with this article, there's so much going on. Honestly, I'm not even like remotely close to being an expert on treasury yields and bonds and all that stuff. So I don't want to like try to talk about it if I don't know too much about it. I'll just read a couple quotes. David Rosenberg, chief economist at Gluskin Sheff, says that the whole treasury debate doesn't correctly frame the issue, but instead that we should be worrying about how far yields rise rather than an arbitrary number. He says markets always and everywhere respond to the change that occurs at the margin. The 10-year treasury yield has moved up around 170 basis points, which is 1.7 percentage points, from its post-Brexit low back in June 2016. Britain's vote to depart, blah, blah, blah. This is too much stuff. But yeah, the 10-year the yield did go above 3% for the first time since late 2014. And that's what's scaring people right now. So now Rosenberg offers his own twist. He says that history shows that rather than any specific level, nor even so much the shape of the yield curve that causes the market turmoil. Instead, it's a 200 basis point rise in the 10-year yield that tends to push markets to the breaking point. Okay, so that's kind of like the meat of this issue, of this article. But again, read this article yourself, and if you have anything to add, if you can educate us in any way, please post in the comment section below. Again, I've never invested in treasury bonds or yield, and like I don't plan on ever doing it. So like it's just something I never really bothered to learn. So I'm sure a lot of you guys also don't know a lot about treasury bonds and stuff, like, or even invest in them. But if you do, please comment below, because I would love to hear your experience. Maybe we can make a collab video or something if you have experience. I would love to talk to you guys about that. So anyways, let's keep going. This article is called The New Stock Market Fear, Signs That a Period of Harmonious Global Growth is Crumbling. Again, another not pretty article. So this one, let me see if I can find a good quote to read. Okay, so one thing I found here is they're saying like, you know, the good earnings are good, but you know, why isn't the market doing well? Like the earnings are beating, like companies are beating earnings, 80% of them right now, which is better than the 74% four-quarter average. And the earnings outperformance was substantial, with companies surpassing average estimates by 9.4% above the average 5.1%. So like a big gap there. And that's really good. So they're saying what gives? Because the stock market is still going down. So he says the problem is that there have been macro forces that have been clouding the outlook. So it's preventing the investor from taking the good earning news and running with it. That's what this guy Young told MarketWatch. Now, it says some of those macro forces include the deceleration in places like the UK, where the economy grew at its slowest pace, or at the slowest pace in more than 5 years in the first quarter of 2018. So that's not good, because global markets do affect each other, and so that's not good. He said it may be that that gave European Central Bank President Mario Draghi a degree of pause during his news conference on Thursday as he discussed the Eurozone's monetary policy. This stuff's boring, but I mean, it's all related. So again, you got to read this. It's just a lot of uncertainty is really the gist of it. So yeah, let's just keep going. Now this article is called "Watch This for Early Signs that the U.S. is Tipping Towards a Debt Crisis." This one says this one's not as, I mean, debt crisis obviously is really bad, but they're saying it's not as bad right now as it could be, but it's something to look out for. He said their model calculated the probability of a U.S. debt crisis has increased by 7 percentage points from a historical average below 9% to around 16%. Yeah, obviously that's bad. So give this article a read. I'm just trying to move through here so this video is not like forever long. This article really scared me. It was called "The Big Squeeze: Why Stock Market's Bull Run Faces Its Biggest Threat in Years." So yeah, read this article especially. It's talking about like higher cost of goods, and wage cost is squeezing corporate profits. But it says, yet by far the biggest risk is that policymakers will go overboard. So they're really talking about the Fed, like overcompensating, which could really push the economy into a recession. So that is also really scary. So I mean, there's just so many scary things. And then this one talked about why investors should dread the month of May, especially this year. Talking about midterm elections and how they're usually bad for the NASDAQ and stuff like that. Give that one a read. Okay, we're getting close to the end, guys, I promise. So I only have like a couple articles left to talk about. This one's called, okay, so this one's a positive article, actually. So this one says, worried about a flat stock market? Don't be. So this one's it's a Forbes article written by John Toby. He's basically saying that people are kind of overblowing this whole 80% of the companies have topped expectations. He says it sounds bullish, but however, it takes a bearish hue when mixed with the flatter stock markets that includes the post-earnings sell-off. So he's saying like a lot of stocks beat earnings and then they went up, but a lot of those stocks closed down after that. Like Intel, for example, was one of the companies that reported earnings, they went up and then they went down. Yeah, Johnson & Johnson also did that. Boeing, Caterpillar, Goldman Sachs, JP Morgan, United Technologies, those are all companies that had good earnings or whatever, and they went up during the day, but then they closed down. So people are fixating on this 80% thing, but he's like saying it's not as good as it sounds. But however, he's saying the reason that they're going up and then down is that the market's being very scrutinizing and they're being very smart. And he says that's a good thing for this economy and the stock market. He's also talking about, so he's saying out of the Dow Jones Industrial Average, which is 30 companies, 20 of them reported so far. Out of those 20, 6 of them opened down and then closed down for the day. 14 opened up, but of those 14, half of those closed down, half of those closed up. So he's saying that this picture reveals a healthy stock market. That's his opinion. And that the companies in the same sector show a discerning analytical process. For example, he says the 4 companies that reported before Friday's opening were 2 pairs in the same sectors, Intel and Microsoft, Chevron and Exxon. The first 3, so Intel, Microsoft, Chevron, beat their published earnings estimates and opened up. However, Intel later reversed and closed down, while Microsoft closed up. In addition, opposite to Chevron's opening up and closing down, ExxonMobil closed down, or opened down and then closed down. So he's saying the bottom line is there's fulsome analysis and evaluation going on, regardless of the amount of surprise in the earnings reports. Moreover, while the hope is fading that good earnings report will reignite the 2017 bull market, the stock market is holding its own, which is an important accomplishment at its near correction level. And he ends by saying, therefore, it appears that a good time to invest in stocks is approaching. So that was one of the positive articles that I saw. And one more that I looked at but I haven't read. Let me find it real quick. All right, I just realized how long this video is getting, so I'm gonna just name the article. I'll post a link in the description. It has a video, so you can just watch it and you don't have to read anything. But this guy says a shift to safety trades could burn investors. He's basically saying right now with this volatility, a lot of people are gonna probably do a lot of panic selling, like I was talking about doing. I'm not sure yet. I'm still most likely gonna do it. I don't know. I just don't know. I gotta think about it. I really don't like making these decisions, but I need to think about it. But he's saying that it could actually end up being worse. Just watch the video. He says that it's not as bad as people think, and by doing that and trying to protect themselves too much, they could be missing out on profits and stuff like that. So we're gonna leave it at that. If you like this video, please hit that like button and subscribe if you haven't already. I know there's a lot of uncertainty. I know I don't even really know what I'm doing yet, but we still got one more day in April, and then we got a couple days in May to really see what's going on. And if it does look like May is going to be pretty crappy, then I will start selling stuff, buying puts. But if it looks like we could be okay, we're forming a good base on the 200-day moving average, and it looks like we're going to come back up, I might just hold on and see what happens. So anyways, hope you guys had a fantastic weekend, and we'll see you tomorrow.